morning, ladies and gentlemen. I'm Chaeyoung Lee, the host for the sessions of the World Knowledge Forum 2022. We'll now begin the session, Market Update 2023, New Wealth Equation. The moderator for this session is Youngju Nelson, Professor of Graduate School of Business, Hongkyunggwan University. So please welcome her with a big round of applause.
All right. Good morning. Welcome to our session. I'm Youngju Nielsen. I'll be serving as your moderator today. Are we on the verge of inflation, or are we just about to see this price pressure we're going to burst into recession? It is a very confusing moment, and I hope I can see clear path to 2023. I believe you feel the same. Today, I have 4 experts here who are going to share their insight with you. Let me introduce you our 4 speakers. Charlie Walker. Charlie Walker is head of equity and fixed income primary market for the London Stock Exchange Group. Before then, he was working for JP Morgan Equity Capital Market, having joined in 2018. He's a capital market specialist, having previously worked within JP Morgan Equity Capital Market, responsible for originating and executing equity transactions. He has assisted in raising over 45 billion equity capital across 5 continents on behalf of clients. Please welcome Charlie. Our next speaker is Jae Yoon. Jae is Chief Investment Officer of New York Life Investment Management and Chairman of New York Life Investment Asia. Mr. Yoon is responsible for developing and driving firm's business strategy in Asia. Prior to joining New York Life, he was head of quantitative research, analytics, and risk management globally at Western Asset Management. Please welcome Mr. Jae Yoon. James Huang, he is the president of EXP Commercial Division of EXP World Holdings. EXP Realty, the real estate cloud brokerage, is the fastest growing global residential real estate company with more than 50,000 agents in the United States, Canada, Mexico, and globally. He was formerly at SPATIC Commercial Global Affiliate and the BRC Advisors. Please welcome James Huang. Jordan Rochester. He is a senior G10 FX strategist at Nomura. Jordan is a regular guest host on Bloomberg, covering broad macroeconomic strategy views. He is especially well known for UK, and he is known as Mr. Brexit. Please welcome Mr. Brexit. Last week, S&P just hit around 3,800. And I'm not sure you checked, but yesterday, US 10-year Treasury was above 3.5%. It's 11 years high. We have very bad news from FedEx a few days ago. Their prior preliminary earnings announcement, after that, the stock was down 17% overnight. As you know, this week, FOMC news is dominating discussion. I want to ask Charlie, from LSE perspective, what do you see as the key factor driving now? And where do we go from now?
So I think from the London Stock Exchange's perspective, it's worth noting we run multiple markets. So we run equity markets, funds markets, and fixed income markets. I think what's interesting is, for starters, we don't provide investment advice. If we told investors to buy one part of our market and sell another, the recommendation to sell probably wouldn't be particularly well received. So that's not what we tend to spend our time doing. But what we do a lot of is look at what are the drivers, what is driving the performance of different parts of our markets. And that's where we've seen quite a shift over more recent time. If you go back for quite a period of time, there was a relatively stable, and you could pick out certain instances, but a relatively stable geopolitical environment. So when companies were listing on the market or when they were raising capital on the market, investors were often looking at fundamentally what was the company, what was the growth prospects of the company, and then looking at what's the sector and the country that it's exposed to. So those two aspects, sort of the fundamentals of the company itself, and then what's the sector and the country in which they're exposed to. And what we've started to see, particularly over recent years, has been that geopolitics is starting to move not just company performance, but entire sector, and in some instances, entire market performance. Events that happen all of a sudden trigger quite large market reactions in a way that, for a relatively benign period of time, we didn't see in the same way. You could point to the Russian invasion of Ukraine, probably the most prominent example at the moment. You could point to US-China trading relations. On our own patch, you could point to Brexit going back a little bit further. But these things have started to impact broad market performance. Now, for the person on the street, if you think about some of these links that happen, they're not always necessarily evident that one event is going to lead to something else. So if you look at the Ukrainian invasion as an example, that drove up energy prices, which drove up inflation, which is now leading to interest rate rises, which has led to a massive sell-off in technology stocks. Now, that may be very apparent to someone who is an industry professional and an investment professional, but to a person on the street, an invasion of Ukraine by Russia leading to an enormous sell-off in technology stocks is not necessarily a linkage that they would have made, and yet through 3 or 4 steps, it's precisely what's happened. And so we're starting to see that more and more. So what it means, I think, from an investment perspective and from the investor perspective that we're seeing is that there's almost a third leg to the stool. You need to now be looking at the company, you need to be looking at the sector and the country in which it's exposed to, but you also need to be looking at the geopolitics of the situation, and is that going to be impacted in the future? I think over the last couple of decades, really, you've seen a big drive towards globalization across the piece, and it's true of capital markets as well. Overseas M&A was generally encouraged, inbound investment generally encouraged across sectors. And now you're starting to see countries become far more assertive in driving certain industries. You've seen this in China as an example, designating certain sectors as being sensitive and therefore not wanting them to access overseas capital markets, particularly in the US. You've seen it in COVID, actually. Life sciences, countries looking at, do they have life sciences businesses domestically that are able to research the drugs that they need, produce the drugs they need so that they could vaccinate populations? You're starting to see it in energy security. Countries taking more of an interest in where is the foreign capital coming from, or where is the capital coming from, and governments even setting up funds to try to drive that renewables infrastructure from a resiliency perspective. Now, we see this on the LSE because 40% of the companies on the exchange aren't UK companies. They're either not headquartered in the UK or they haven't got their primary operations in the UK. And that's the same on the investor side. 60% of the investors that own LSE-listed stocks aren't UK investors. And so it's a wonderfully international market, but what it means is that you see these dynamics playing out increasingly. And so I guess the key takeaway from our perspective is that the geopolitics is likely here to stay. You're likely to see a situation of a relatively benign environment not necessarily being so benign in the future. And so from an investor perspective, it's starting to become an increasing part of what people are and the market are looking at.
Okay, thank you very much, Charlie. But Jay, do you have the same view? What is a corporate perspective?
Yeah, so I have to look at the view from the globe, so much higher level of view, or one level higher. So when I look towards the world right now, US appears to be maybe what I call the single engine of growth, the only real large developed country that seems to be operating where it may be able to withstand recession through 2024 if left alone. When I look from US vantage point towards Europe, my only question is really, two questions is really, between UK and continental Europe, who's going to go into recession first in 2023, and how cold the winter be that will drive the severity of recession in Europe. And secondly, in China, Premier Xi has this common prosperity, zero COVID policy. He doesn't seem to have the focus on economic growth. So we've had 5% GDP dialing all the way down to 3.5. Will it go further down? And therefore, will these two other continents or countries drag US into recession in 2023? So with that big picture theme, my view coming into this year was perhaps recession is somewhere in late 23, 24. Now, keep shifting that forward, and with the Fed pivoting their position, and we'll find out tonight, if they take a more hawkish view, and I do believe they're going to continue to remain hawkish, I think US may also head into recession sometime in middle part or earlier part of next year. So that's the big picture.
Oh, okay.
Sorry.
I was really hoping to hear something more positive, but
There's always positive in everything, and I'll get to that. Where should you invest?
we look forward to it. We know that a lot of currencies are struggling, and let's say, well, not only Korean won, but Chinese yuan depreciated about 8% from the beginning of this year, right? And we know that China's central bank, PBOC, is start resisting really a lot, and they cut their reserve requirement by 2% point. And then every day, they set their fix stronger than market expect. I'm not sure how this will gonna go. Jordan, do you have any view on this? And do you think actually cheap depreciated Chinese yuan can have inflation?
Well, it will definitely help inflation in China. It's one of the few places where inflation is lower than most other countries. But unfortunately, I share the same sort of outlook. I have a bit of bad news for global growth, which is I do expect a recession, unfortunately, to come. But when it comes to the Chinese renminbi, we're looking for 720 by the end, not of this year, but the end of October. So the move's going to come pretty quickly. And that's the high, the cyclical high in 720 at $CNH that we saw around 2017 and 2018. And the risks are it goes beyond that. Now, the PBOC have been stepping into the market, trying to, as you say, slow the pace of this currency depreciation. I think that's the same for many emerging markets, central banks all doing the same thing, all looking to the Fed, wondering when will they stop? When will they stop raising rates? And I think that answer comes probably in February of next year, or maybe March, April time. When we get to that stage, the growth outlook and the inflation outlook, hopefully in the US, has turned, and when what they call a dovish pivot, when the Fed performs that move, then we could see perhaps some dollar weakness come through. So for the time being, into this Christmas, it's going to be a pretty wild ride for most of Asia and Europe with the dollar. We're looking for another 10% dollar appreciation on the DXY. That puts euro dollar down to 90 cents. That puts the pound down to 106. And unfortunately for dollar Korea, it's something like 1450 to 1500. That's where we could be by Christmas. But like I said, hopefully in February and March, we have a Fed dovish pivot, and then we could be talking next year about a softer dollar when that moment happens.
Oh.
Sorry.
I tried to keep it positive.
No dovish pivot.
Yeah. Yeah.
Thank you very much, Jordan. Well, I cannot touch real estate market, right? So I also see that we also see that some of the real estate markets start softening, and especially some countries like Canada. But recently, we also see a little bit softening U.S. market, but I don't think we have a really clear, strong sign in real estate market yet. Is it my hope? James, can you please add?
Well, thank you. So in the real estate market, we saw, with the lockdown, a big shift, but then it actually helped everyone expand from the core markets in residential to more of the secondary, tertiary, outside the core markets where people used to go to work with the remote working. So it really changed a lot of patterns and habits using technology to readjust. But also what happened with the lockdown, it created all this easy money, right? That money flowed into the system to help as the economies were locked down. This also, when people are at home, we know what they were doing. They were investing in the stock market, they were buying crypto. People were now having the flexibility not to work in the centralized office. They were starting to move out to locations where they found better cost of living, just more space for the dollar. So we saw people just starting moving out. And then about 2021 of summer, people started saying, okay, things are starting to get a little better, different variants, people had their booster, people felt a little more cautious, careful about coming back out, traveling, and moving again. So we started to just watch as still more stimulus came. People are still observing whether or not did we come back to the office. So we did still grow, but we learned, a lot of the supply chain and other issues geopolitically started to happen. And as we kept on pumping more money in the system, seeing the supply chain people moving out, decentralizing offices, really had a big impact in the residential market, where it started diversifying, but with so much money into the market, it started increasing prices to a point where in 2021, even I would say the first part of 2022, we were looking at really overpriced and multiple offers in a real estate market. But now, as the interest rates started moving up, we know most people, when they were looking at sub 3% interest rates for your debt coverage, so you can buy more building or buy more home, now it's at 6%. 6%, it's just dropped, tremendously, because now you can't leverage with the money, with the interest rates, and we do see, prices, unfortunately. If you looked at the old way of looking at it, we had negative GDP growth for 2 quarters. So for us, our opinion, we're in a recession already in the US, but it's how do we manage and how do we handle, how does the global markets work together? But we are looking at, and we're starting to see cracks, that there are less offers. Also, prices are slowly adjusting in certain markets. So we're gonna keep an eye on the unemployment, right? Because people that did buy real estate residential are in the market and they have very low interest rate. They could rent out their home, but unemployment is what we're watching, and we're seeing what other cracks. If the supply and demand in different markets, if the pricing is gonna start coming down.
All right.
So, not great news, but.
I was really hoping a little less negative news here, but I guess it was just my hope. But do you actually see like a particular market you are more bearish or bullish in terms of real estate?
So a lot of things, as we look at everything broader, we used to be more simplistic. It is where most people come back to work, so it is that remote working. As we see in some big offices like San Francisco, New York, a lot of the offices, they sublease, they rent it out, right? Their space had extra capacity. So we look at the larger cities, but there is the supply demand, but secondary cities right now that really got the boom, let's say like Phoenix, maybe Austin, Atlanta, where people were moving out, those secondary markets are showing a little more stress than the core markets in office. So I'm seeing the bigger movements in the secondary markets rather than the primary or tertiary markets.
I see. Thank you very much. Yeah. Over the last couple of years, I really see dramatic change in Korean investors. So previously, people were very interested in Korean stock market. Of course, still they do, but increasing number of individual investors, they have exposure to foreign asset. And now there's a lot of debate about hedging currency or not. Do you have some perspective in terms of hedging investment portfolio, Jay?
Oh, sure. So for equities, I don't, or real estate for that matter, the best practice for institutional investors is not to really hedge. Hedging comes into picture more when it comes to fixed income, and it's really driven by volatility, right? when you're a fixed income investor in another currency, the driver behind the return volatility is currency over interest rate movement. So therefore, you end up hedging. And at the moment, I do agree that we're in a regime of king dollar, and we saw this in the 70s, in going into 80s, and we're in a probably similar regime where I think with the aggressive Fed hikes, we are going to likely see stronger dollar. So we mentioned 1,500 on the won, 150 on the yen. These are extremely achievable, and we're right around the corner. And directionally, as we get into end of the year, dollar just has so much momentum to be stronger and all the reasons to get stronger. So if you are investing in U.S. fixed income, you from Korea or other countries, you probably best to hedge. And it gets interesting next year, and this is where I believe the Fed's going to stay put, and the next move even into next year will be more hike, not cut, but I could be wrong. It all depends on inflation. If inflation doesn't recede to a reasonable level, US Fed will have to consider raising rates further, which would put stronger dollar pressure. I think everybody needs to understand this when Powell said in Jackson Hole, I don't want to be Arthur Byrne. Everybody should go and look at what happened in the 70s, where Arthur Byrne had inflation problem. He had it mostly licked. Inflation went up, came halfway down, a lot more than our 9 to 8.5. Relative to today, it came down to 6.5, 5. And he thought, okay, now I have to worry about recession. And he eased, and inflation skyrocketed, and we had Volcker raising interest rates up to 20%. So when he says, I don't want to be Arthur Byrne, you need to all understand what that means. Then you won't be talking about dovish pivot, nor will the rest of the market, until we get inflation down to 3 to 4 handle, period. And wage growth, down.
Yes.
You have to put this thing to bed.
The thing is, wage growth is about to come. That's the next story. Unemployment in the US is extremely low. It's 1970s levels of low. And job openings are still at record highs. Pretty much, they've softened a little bit, but if you look at the NFIB survey, 50% of American firms are saying they still have positions to fill, that they're looking to hire and they can't find someone to take that job position. And it's a very strong connection between job openings and the unemployment rates. It's historically a very good signal, and in 6 months' time, we could even be looking at a lower unemployment rate. And this could be the surprise for economists, because I am an economist, I'm a strategist, and I always ask the question, how could I be wrong? And most economists are looking for a slowdown in growth. All the charts point downwards. As you say, we're probably in a recession now. And this typically leads to job growth slowing down. But because of this situation with COVID-19, the misplacing of the labor force, it could be the case that we have strong jobs growth into next year, despite the slowdown in growth. And as you say, maybe the Fed just stays put. So that is definitely the risk.
So in your world, there is no dovish pivot.
So in the Nomura official view, there is, but me as the strategist, where could we be wrong? It might not be, no.
Right, exactly. I agree with you.
Well, the other worry is that part, employment imbalance can impact inflation even more, right? That's another part I worry about. I feel it is extremely difficult and confusing moment. Some people ask me whether it is harder than in 2008. I say not yet. It was definitely hard at the time. But I'm wondering, how's the capital raising environment?
So the capital raising environment, so it's interesting, people often look at the IPO markets as a sort of barometer for the capital raising environment. And there it's, unfortunately, as downbeat as we've all been talking about. So IPO volumes in the US, Europe, UK, down anywhere between 80 and 90% compared to last year. Now, don't forget, last year was an incredible high, but even if you take it back to 2018, 2019, you're at lows that we haven't seen for 16, 17 years, really, since after the dot-com bust. So if you look at the IPO market, it's a pretty sort of low picture. I guess I understand why everyone looks at the IPO markets. It's the most glamorous bit. It's the bit that gets all the press attention. we're always cognizant that companies join the exchange or join any exchange, not necessarily just for the IPO, but actually because they want access to permanent capital and they want to be able to raise more capital when they're on the markets. So on the LSE, in any given year, on average, about 3/4 of the capital raised is actually follow-on capital raised by existing corporates. So we tend to pay quite close attention to that element to see whether or not markets are functioning. There, volumes are down quite a lot. They're down about 50%, but the markets are still functioning. And I think it was interesting, during COVID, you really saw the benefit of being a public company. So on the LSE, for instance, we had about $70 billion. Today, that's probably the equivalent of about $50 billion raised on the LSE during COVID, which was essentially just companies recapitalizing and needing to do it very, very quickly. So as soon as the pandemic hit, you just saw a wave after wave after wave of companies recapitalizing. And the markets were there for them to do it, but IPO volumes went very, very low. This year, you've seen a little bit more IPO, not a lot, but you've seen a bit more follow-on capital raises. So in the first half of this year, we had about £10 billion of equity capital raised on the exchange. Again, down from last year, but still fairly meaningful. So we do see that there's capital there for the companies that need it. What will be interesting going forward will be seeing whether or not IPO markets return and when they return. I think we've done an analysis recently actually looking at IPO volumes back over the last 20 years or so in Europe. And what you typically see is when there's a trough, you hit the trough for 1, 2, in some instances 2.5 years, and then you see a rebound. Now, the reason for the rebound is companies still need access to capital markets, whether it's owned by private equity portfolios and their portfolios are maturing, whether it's companies that want to fund growth, they can only wait so long. But there is a readjustment that needs to happen. So if you look back last year on the LSE as an example, 40% of the IPOs were technology companies, technology or consumer companies, high growth companies. Now clearly, those are the ones that have struggled the most in the current market environment, and you've seen the sell-off in those stocks. If you think an IPO typically gets mandated about 9 months before it actually hits the market, there's a period of adjustment that needs to happen. And so what we're seeing is in the companies that we're speaking to, is that period of adjustment is happening. You're seeing far more companies from sectors that are better able to withstand the current economic conditions and the ones that we're expecting to happen over the next 1 or 2 years compared to before. So we're seeing more in the natural resources space as an example. You're seeing more that have natural inflationary hedges to them, more consumer staple stocks, things like that. So it's been a pivot, but that pivot happens over a period of time. The other thing we're seeing is that companies are starting to get ready, but with a view of just getting ready and then being in a holding pattern. So to prep for an IPO, like I say, it takes 9 months, sometimes 12 months. It's far easier to get ready and then put everything in standby for when market conditions return than it is to wait for market conditions and then push the button and start your 9-month process. You'll probably have missed the window by that point. So we see an increasing number of companies just getting ready to access the markets in different sectors to what we've seen over the last couple of years. And so it'll be interesting to see over the next year or so what happens. I think we'd all been hoping that Q4 was going to present the first window where companies would start coming back to the market. I think you'll see that selectively. You've seen Porsche just launch their IPO in Europe as an example. I think there'll be selective examples of it, but I think it's going to be pretty selective. I think most people are now talking about 2023.
Okay. It seems like our all speakers expect a strong dollar for a while. James, do you see any impact from strong dollar in real estate market?
We do indeed. So it is always flight to safety when we see what's going on. So many people are looking for these opportunities in real estate as a hedge, right? It's a hedge with US dollars in US hard assets. But the issue is right now there's still that imbalance unless you have to deploy or unless you're an occupier where you're using the property. So for those that are investing, you know, we always say whether you're looking at REITs that have come down a tremendous way or you have the expertise and knowledge to run your own. But there is that imbalance that we're waiting, and I think many of us are just being patient, right? Buying right, making sure we're buying the property right, and just watching how interest rates move, unemployments go, different things with, let's say, war with Ukraine, supply chains. Sometime in 2023, we think there's going to be that opportunity. So we're just patient. You know, we're telling international nation patient. But the caveat is actually when I was here in Korea, people are saying, you have such a strong US dollar, why don't you invest here, right? Because of we have the currency, but it's really finding the right partners, the right people, understanding, as they were saying, geopolitical, other parts, but there are opportunities. And I remember, should have bought some stuff at different crises in Toronto when they had their currency crisis in oil. There was a 35% in Toronto that probably you don't see anymore. So the way we look at it is, yes, there are people that want to come to the US for that flight to safety, but also those that are in the US are looking for opportunities outside because of their strong US dollar. There is some advantages, but I always just say, be patient, watch, don't just jump right into it, but just keep watching and monitoring until you feel sometimes that you're buying it right.
Well, I thought the 1970s example was a good case study. And for the housing market during the 1970s, you didn't have a crash. You actually had wobbles, but you had house price appreciation. And one of the reasons was wage growth during that period allowed households to still afford their interest payments and the capital repayment. But the one problem for the housing market, we have record high prices, and we've just had 30-year mortgages go to 6-7%. So the interest payment is a record high. If you adjust it for inflation, though, it is a bit more like the 1970s and 80s. So it is perhaps the case that due to a lack of stock in New York, for example, and those cities where, let's be honest, during COVID, nobody started new projects, that could lead to some safety in those places too.
I hope you're right.
I hope so. I'm long London house prices, so there we go.
I'm long Manhattan. So.
But Jay, do you see a strong dollar will going to hurt some corporate earnings in the U.S.?
Yeah, so corporate earnings in the U.S. Obviously related to strong dollar. So the large S&P 500, which constitutes the largest 500 companies, about a third of their earnings, or maybe even more, come from overseas. Mm-hmm. So we already know Microsoft, from a couple of quarters ago already started to caution that their earnings are going to be guided lower because of the strong dollar. So you have that impact from larger companies in the United States. But even without the currency, you do have earnings deterioration because of inflation and what will remain to the earnings of the company after they pay for all the cost of inflation. So we have a situation where third quarter earnings is already, as you mentioned, FedEx, et cetera, are starting to, on an idiosyncratic basis, hit certain companies and hit them severely, where I think overnight we had another company that had another 20% decline that's in the S&P 500. So earnings are trending lower. The question is, companies make nominal GDP, so they do benefit from, equities benefit from inflation, but the problem is we have a severity of inflation where it's starting to work against earnings of S&P. So I am cautious as we get into the end of the year that the strong dollar is impacting earnings, but inflation is impacting it more. I'll say one last thing about the dollar. I know a lot of people wonder, like in the 80s, will there be a global intervention to stem the dollar from rising further? I think Japan and Korea and a lot of countries obviously want to see that. I'm not so sure the Fed wants to see that just yet, because if you weaken the dollar, it feeds to inflationary pressure within the United States, and I think Fed's primary focus beyond strong dollar that it hurts everybody else but Americans is inflation hurting Americans.
I see. It made me think what Jordan actually think about the reaction of Bank of Japan.
Indeed, and just on FedEx, before we touch on the Bank of Japan, if you plot US growth versus FedEx prices year on year are always telling you what US growth is going to be. So it is a big deal, this FedEx earnings report. But on the Bank of Japan, I really agree with what you said. The Plaza Accord, 1985, Japan, US, and Western Germany agreed to weaken the dollar. And it was signed in the Plaza Hotel, so it was called the Plaza Accord. That's not going to happen. We've seen Bill Dudley from the Fed say they don't want a weaker dollar. because of that inflation story you're saying. And politically as well in the US, Joe Biden has midterms in November.
Yes.
So the idea of allowing inflation to go back up is a non-starter. So then we get to the Bank of Japan, who clearly in conversations with Janet Yellen, there's been probably a risk of talk of, can you help us out with our currency? And I think the answer's probably been no. We won't know for sure, but that's been the insinuation, because last week was a game changer for the view on Japan. We had the finance ministry for the past few months being quite hawkish, talking about this currency weakness is unsustainable, it's detached from fundamentals. The truth is, it's been very attached to fundamentals because we've seen US interest rates continue to rise, and Japan is the last central bank doing quantitative easing, allowing for loose monetary policy. So when it comes to the Bank of Japan, last week we saw Kuroda, the governor, agree with the finance ministry that the yen moves are not warranted. And that is a hawkish sort of move from Kuroda there. So we'll see from the Bank of Japan meeting coming up this week. But for us, the idea of them giving up yield curve control, so allowing their currency to strengthen from the monetary policy side, it's unlikely to come so quickly because on the service side of inflation, Japan wages are still very low compared to global peers. But if I'm wrong, it leads to extreme yen strength. If the Bank of Japan gives up yield curve control, it's the last central bank doing quantitative easing, global liquidity will fall and the yen will strengthen. So this is the scenario where I sympathize with 150, as you say. I've got clients asking me, do dollar yen go to 160? But if we have the Bank of Japan turn hawkish, do foreign exchange intervention, let's say, on their own without America, then 135 is possible. And let's not forget, Japan has the largest foreign exchange reserves in the world, over $1 trillion. So it could be an event to trade, that's for sure.
Can I add to that? I was in Japan last week. There were rumors that Bank of Japan's intervening because they were tapping the banks, and they usually tap the banks
The
before
rate
they
call,
intervene. Yep.
yeah.
So they did that last week, and then the yen strengthened like for what, 2 days, day and a half?
I think a day, no
Right.
more.
And then it started to weaken again. So I'm not so sure that it's going to have a longer term impact. Like you said, it's going to be a blip and it might last a week. And then as far as the intervention, you know, what I'm hearing from the Japanese is they're going to let go of the 10-year, but they're going to start controlling the 5-year, which means you're going to go flat to 5 and steepen from
Big
there
time.
on.
Yeah.
And let's be honest, the 20-year JGB without the intervention is trading at 1.4%. It means the 10-year has a stop at 140. There's a demand. So I think it might put pressure on the global yield curve, and US yield will see further pressure to head higher. But I'm a little less worried than I was 2-3 weeks ago about letting go of yield curve control.
You think it's less likely after your trip?
They will let go of the 10-year, but they'll, I think, hang on to the 5. Meaning they're not going to go all in.
If they do foreign exchange intervention, we have to remember, let's say $1 trillion of reserve. That's a lot of treasuries. And that's a lot of treasuries they'd have to sell in order to buy the Japanese yen. So it becomes a problem because guess what? When you sell fixed income, interest rates rise. And the problem for Japan has been US interest rates have been rising. So if they do FX on its own without moving the yield curve control, it won't work.
But they'll sell the short end. I
Yeah.
bought 30-year treasuries yesterday. I like it at 360. I'll buy more at 4. It's good level. So putting it positively, I think U.S. Treasuries, you got to start adding to your U.S. bond yields, because if things play out the way it's playing out, you got to start worrying about recession, and therefore you have to ask the question, even though at structural 3 to 4% inflation, which means the 30-year Treasury should be more like 4 to 5.
Yeah.
I think over the next 2 years, you would be welcome to be owning 4%. Between this 3.6 now to 4% long-term treasuries as a hedge to recession.
It's interesting, we've been talking about currency, and it's also interesting seeing how currencies are impacting the broad equity indices that many people will probably be investing in. So, Jay, you mentioned about the S&P 500 and about a third of the earnings coming outside of the US. In the UK, it's the opposite. So if you look at the FTSE 100, over 70% of the earnings are generated outside of the UK, so earnings in foreign currencies, the majority of which, or the biggest component of which, is dollars. So we actually have a tailwind for the FTSE 100 because of foreign earnings. So the FTSE 100 year to date is flat, Right? Last time I looked, NASDAQ was down 25, 26%. Now that's a combination of a few things, right? That's partly sector mix. Our largest markets are natural resources, healthcare, consumer staples, and financials, relatively speaking, better positioned than high growth tech. The other element to it is currency. You've got this sort of natural hedge that's driving markets, which again is something that for the average investor on the street, I'm not sure they'd necessarily, when they're buying an ETF, start thinking about that. Then you go to our growth markets, and clearly they've been impacted with what concerns around what will the UK economy do, what will the European economy do, which is predominantly where they're exporting to. But it's feeling to us like it could become a bit more of a stock pickers market. You know, rather than the broad-based indices, actually do you start going back to a world where you need to be understanding the dynamics of the individual company, the foreign exchanges that they're exposed to, the geopolitics that we've been talking about, rather than before where you could rely on a bit of a GDP uptick to play equity markets.
Right. On a hedge basis. I fully agree.
That kind of remind me about my tactical asset allocation portfolio. Do you have some suggestion for 2023 tactical asset allocation portfolio for our investors?
Oh,
yes,
okay,
please.
yeah. So I fully agree. So it was interesting last year, last week, I was in Japan. I was telling the Japanese investors, I think it was to the retail investors on a show, that I like Japanese stocks, and their response is, but it's not moved all year. And I'm like, thank God, that's all I'm looking for these days, right, out of equity. So owning Japanese equities hedged, similar to the UK story, was like the best contribution to my portfolio, because US is down, and I'm value tilted and dividend value tilted in the US. And so I'm still down like 10% over NASDAQ being, down 25, et cetera. So I think the thing for equity for me rest of the year, and by the way, I get asked this question all year, this year from beginning of the year. Two things that retail Korea seems to be very interested in was Tesla and NVIDIA. And I've been saying consistently from beginning of the year, these two stocks trade 10 times price to sale. You don't want to be touching it. They don't talk about NVIDIA anymore because it's crap. They still challenge me on Tesla because it's like magical, right? It went up last night. So now my logo's changed. When Apple and Tesla finally correct, that's when I know this bust is over. And until then, the religious followers of Tesla and Apple will prop it up. I think next year, as we look at now to end of the year, I would remain cautiously value tilted, dividend tilted. I used to love energy stocks. I love it much less because I think structurally we're in an energy super cycle. But if recession fears continue, I think energy stocks will actually have a much better entry point. I like fixed income. Like I said, just coincidentally last night, I have some limit orders that go in because I'm traveling and I'm sleeping. I bought some US treasuries at 3.6 on the 30-year. I think we'll see 4%, but you got to start buying. You're not going to market time and look for that one entry point. I think you get into fixed income, you get into public or private credit, and I don't want to get into detail here. It'll take too much time, but I like fixed income because you can't just sit in cash. So you can't just look at, if I sit in cash, I don't lose money. It's inflation adjusted, right? In Korea, it's maybe 3 to 5%. In America, it's 5 to 8. And you got to look forward. Next 12 months in the US, I think inflation might run at 5%, hopefully less. So you're sitting in cash, you're absolutely guaranteed to lose about 2 to 3%. That's not a bad place to be, but I think you need to start leaning into more fixed income and be willing to take some tactical credit risk, but tactically. Anybody want to add that?
What about James? Do you have any suggestion in terms of allocation to real estate for individual investors and also institutional investors? Because recently, especially Korean institutional investors, their interest in commercial real estate is really high and growing rapidly. And I hope I can hear your opinion about that.
Yes, so with the supply chain issue, people moving out of China, people are looking for new ways of building their supply chain, whether it's in Vietnam, Southeast Asia, Mexico again is being discussed even through Panama. So because of that, if you're an owner user, you have different reasons for why you need to set up your supply chain to be more efficient, to hedge, to move around, so your business is not going to get disrupted. But I always say, going back to residential asset allocation, kind of putting my Wall Street hat back on, is if you need it, you buy it for a particular reason. If you're an occupier, you buy it for a particular reason. If you're going to invest on it, let's say passively, and you're not going to be active, I would then just use REITs, fixed income, bonds, other ways of doing equity, balancing it out. I mean, I did it with my own portfolio, moving cash, but you can't time the market. Look for some good deals. I like to be sometimes a contrarian to see if, the price per earnings makes sense. Are they coming back to a reasonable level? So I would say, for me, if you are using it as an owner, make sure that it makes sense, why you're doing it, for the reason, whether it's you're occupying or the supply chain you're trying to change out so you're not going to be disrupted for your business. If you're a passive investor, look for price earnings, look a little deeper, look at the geopolitical, look at the currency. I do believe, yes, we're going to see, some more value strengthening of the US dollar going on. So my suggestion is know why you're doing it, know why you're buying it, and being patient is not a bad thing if you have the time to be patient. I think being patient is not a bad thing.
Okay. What about in currency side? Should the investor care more about specific currency exposure in their portfolio?
Absolutely. I think you mentioned the energy sector. You think we're in an energy super cycle. I really agree with that as well. And being a bit of a contrarian, we've had softness in energy prices. So that's why kind of the attractiveness of those trades has softened. But I think we're in for a long-term appreciation of countries that are commodity producers versus those who are commodity importers. And a lot of people are worried about the dollar trade in that respect. So one of the best information ratios in terms of risk-adjusted returns is being long the likes of Norway and Canada and Australia and New Zealand. New Zealand for food security and the rest for commodities that the economy needs. And you can strip out the dollar, you can sell the yen, unfortunately you can sell the Korean won, you can sell the likes of Swiss franc, the euro and the pound to fund that trade. It's a very well-adjusted risk-return sort of outlook on that side because we are going through an energy super cycle. What we're seeing in energy prices, it's artificial actually. So Joe Biden's done a very good job of lowering gasoline prices. It's been partly to do with China growth being sluggish, but it's been a lot to do with Joe Biden releasing the government's holdings, the strategic petroleum reserve of oil. Now that's going to happen all the way through to the midterms. It comes to the end in October, that drawdown, but I think it will be extended. And do we have an extension for 1 month? It would be very obvious that it's purely for the midterms if that's the case. Or does it get extended to November or December? Whenever it does come to an end, all the data shows that American demand for oil is actually outstripping supply. And America has become one of the world's biggest oil producers. It's now a net exporter of oil as well. It's a complete regime change in the past 10 years. Then let's look at Europe. When it comes to Europe, a complete opposite. Germany's economic model has been completely challenged, importing cheap energy from Russia and elsewhere, creating nice Audis, Volkswagens, and Porsches for us. They're still going to make those Porsches and those Audis. But one thing we have started to see in Europe is factories are literally shutting down production. Right. So the price of energy in Europe is 6 to 7 times higher than America. So when it comes to paper, when it comes to plastics, ceramics, glass, metals, fertilizers, all these basic items, but they require burning gas and using electricity to create them, the competitiveness of German exports has been wiped out on those products. So Audi and Porsche, they're still going to make their cars, but they're going to import steel and aluminium from the likes of China and the US. So this means a structurally weaker euro as well. So from the currency side, I really like commodity currency exporters and selling the likes of euro.
Okay. I actually see a little bit of a positive side from Jordan's comment. Do we actually have any upside, or do we have any potential surprise positively?
Well, I think recession and recoveries happen every, 7 to 10 years in the US. So I don't think people should necessarily look at the fact that recession is possibly coming next year as a, or later, but at least in my view next year as necessarily a bad thing. Because well, the positive is this is a mild recession. So a lot of people younger than me, and so I look to my left, if your recollection of recession is 2008 and 2000, those are actually more severe recessions. 2008 was even branded global financial, great financial crisis, GFC. I think this coming recession so far, I really hope that it remains this way, looks more like the late 80s type of recession, which means it's fairly mild and the defaults won't spike any higher. So for example, so in the great financial crisis, high yield spreads went to 2,200. During the tech bust, because a lot of the tech companies were in the high yield market, went to 1,100. But if you date back to late 80s, I think high yield spreads went to 800 to 900. We're at 450, 500. So my only thing is, if this recession remains mild, I just don't think people should get overly optimistic and try to day trade the Fed pivot and all that. Just stay the path. Invest in fairly lower risk areas, and when things start to get cheapened and relative value starts to come your way, ask yourself, what do I want to own in my strategic basket? I've got my Christmas list. Christmas is coming. So in that sense, it's actually to me more positive. I'll tell you this, when I said we're going to get into this recession, quietly or carefully, I use Korean word, and we're going to come out of it gradually because there's nothing structurally broken, and Fed's not going to be in a super hurry to induce growth or fix something majorly broken unless real estate gives us a surprise in the United States. In this world, I think, like the Japanese said, when we had our recession, even corporate bond spreads tightened because just the demand for bonds and safety away from other risky assets, even high quality corporate bonds in Japan tightened during recession. I don't think US will do that, but I actually think we're not far from levels where you should start to actually be wanting to own things that give you anywhere from 4%, 5%, all the way up to 10% for private direct lending market, 10% yield for something that's quite high quality, well, high quality meaning relatively speaking, high quality. My only thing is, as we actually show these to our clients and they're like, yep, we'll take that, we may not have enough to sell. Because can I tell you the private equity guys that need to borrow, they're paying 10%. How many opportunities can they find where they have to pay us 10% to borrow our money? That's probably where volume of economic activity will further slow. But I think there's already good opportunities to get anywhere from 5 to 10% income while you wait for a chance to buy real estate again.
One key difference with the global financial crash, it's information. So during that period of time, it was you didn't trust anyone. The information was not there. So when you borrowed or lent with anybody, you weren't sure about their balance sheet. Now, that's still kind of the case for the balance sheet reporting, but in terms of the information for politicians to react, so back in 2007 and 8, you heard the word moral hazard all the time. So the governments didn't want to bail out the banks because it was risky lending and they deserved the pain. Then we had Lehman Brothers change everything. This time around, I've been really impressed by, even though we've got inflation at 8 to 10%, it depends on the country you're in, this usually is an environment where politicians shouldn't intervene. They shouldn't do fiscal stimulus. That will just boost inflation. But in the EU, we've seen quite the opposite. We've seen extreme intervention for energy prices. And the one that really surprised me on the leverage space was we had a lot of commodity houses in Europe facing margin calls just a few weeks ago because the volatility in energy made them get stopped out their positions and so forth. And the volatility was so much higher. the EU stepped in and provided loans to those commodity houses and those brokers to step in and help them make those margin calls. So that's a game changer. So the idea of some leveraged loan popping up and then causing a global financial crash, maybe the risk is lower just because politicians have more information than before.
And there's no bubble to pop in these banks, right? Banks are very healthy. It's something that's to structurally be bad for a long time for financial crisis to happen. My biggest question is Europe, frankly, as I look to the two of you. And it's not that you guys are doing anything like, how are you going to handle Putin in a cold winter? And I think that's what, sitting in the US, that I worry about, that Europe could drag us into recession sooner.
Well, the main thing has been about, will Germany have enough gas to get through the winter? And the answer is yes. And the reason why is because they'll use less. That's it. The supply has fallen significantly from Russia. So Russian natural gas supplies to the EU have collapsed 90%. They're still doing a very little bit. It's about 50 million cubic meters a day. And that goes to the southeast countries of Europe. But like we saw in California, we had heat waves 2 weeks ago, and California sent a text message to everyone saying, please turn down your air conditioners. And I think it'll be the same in Europe, where we'll probably get a text message in January saying, please turn off your boiler, turn down the heating. So it's not great for the household, but it's survivable. But for industry, it's real painful because, like I said, we get cushioned as consumers. The average bill in the UK has been massively subsidized. Same for Germany, same for France. But for industry, not at all. The subsidies are much less, and they're paying these much higher prices.
So will the Koreans keep buying? This is the number 2 selling Mercedes market in the world right now. Will they pay the same prices when Mercedes jack up prices and Lexus is cheaper?
At the moment, everybody's raising prices, but if Lexus does lower prices, then we could have the case.
Japan is going to onshore all their manufacturing. It's one of the cheapest manufacturing in 2023.
Well, it has been very interesting discussion, but unfortunately, our time is almost up. Well, definitely, the world economy is reeling on inflation and China-US trade war and Ukraine war in 2022. I really hope that we actually get rid of at least one risk factor in 2023. Then I think I'm going to feel a lot more comfortable than I am now. Thank you very much, everyone, and thank you for joining our session. Thank you.
Thank you again to the moderator and speakers. Next, Legends in the Making the Future Web 3.0 gaming session will begin at 10:15 a.m. So please return to Seoul by 10:10. Thank you. We'll now begin the session, Lessons in the Making, the Future of Web 3.0 Gaming. The moderator for this session is Mr. Lee Yo-han, Global Operations Manager, the Sandbox. So please welcome him with a big round of applause.
Hello, good morning. It is a big honor for me to moderate this session with the true pioneers of Web3 industry. So for last 3 years, especially during the pandemic, I believe 3 trends have become dominant: Metaverse, Web3, and gamification. And I believe that is why I find this panel speaking very relevant. And it is amazing how we were able to bring these 4 leaders at one spot. And I think this is only possible, in a World Knowledge Forum. So I would like to introduce each speakers, starting with Philip Rosedale. Philip Rosedale is the founder of Linden Lab, parent company of Second Life, an open-ended internet-connected virtual world and pioneering Metaverse. Following Second Life, he worked on several projects related to distributed work and computing. Excited by innovations in these areas and the proliferation of new VR-enabling devices, he re-entered the virtual space in 2013, co-founding High Fidelity, a company devoted to exploring the future of next-generation shared virtual reality. Philip rejoined Second Life in 2022 as strategic advisor, focused on helping to shape and build a better metaverse. Prior to Linden Lab, Philip created an innovative internet video conferencing product, Freevoo, which was later acquired by Real Networks, where he went on to become vice president and CTO. Please welcome me with an applause. Secondly, we have Jason Brink from Gala Games, president of blockchain. Yes. Jason Bitbender Brink is an entrepreneur, blockchain theorist, and avid gamer. He is currently the president of blockchain for Gala Games, the world's leading gaming platform with blockchain integration. Known in the cryptocurrency community with the moniker Bitbender, his involvement in the cryptocurrency market started in 2014, focusing on the use of blockchain for the decentralization of various ecosystems. In 2014, he won the Bill and Melinda Gates Foundation Global Development Network Prize for the creation of the $8, a novel blockchain-based solution to solve the problems endemic to foreign aid. Jason is a strong believer in the ability of blockchain to create transformative change both in business and society. As the president of blockchain of Gala Games, he devotes considerable resources to the creation of stable play-to-earn ecosystems as a means to generate new opportunities for gamers around the world. Yes, please give him applause, welcoming applause. Yes, and we have Hyunwook Jang, Henry Chang, CEO of WeMate, as one of the pioneering game executives in Korea. He started out at Nexon in 1996 and has been in the industry for over 26 years. After Nexon, he was CFO at NeoWiz, Chief Director at NeoWiz Games, and CEO at NeoWiz Mobile. He's actively expanding WeMate's blockchain business by issuing WeMix token, a key currency of the blockchain platform, launching WeMix wallet app for managing digital assets and NFT, and supporting leveraged yield farming. Through the WeMix platform, he presented a new play-to-earn paradigm where users can enjoy games and earn resources, and an intergame economy in which the economies of games are connected. Since then, he has been transforming games of various genres to blockchain games. Yes, please give me a welcoming applause. And Sébastien Borget, who is also my boss, yes, from the Sandbox, co-founder and CEO. Sébastien Borget is the co-founder and CEO of the Sandbox decentralized Metaverse, a virtual world where players can create, play, own, govern, and monetize their experiences using NFTs and Send, the main utility token of the platform. Sébastien also became the president of the Blockchain Gaming Alliance in 2020, a nonprofit organization of 300 key members of the industry. He was recently named the number 4 in the top 100 2022 most influential people in crypto by Cointelegraph. The Sandbox has been featured in Times 100, top 100 most influential companies of 2022 by Times magazines. Yes, please give me a welcoming applause. So the title of our session is Legends in the Making. So there are future legends, if not already. We are going to discuss about the future of Web3 gaming, and I think it is impossible to not to discuss about blockchain and NFT. So the first question would be for all the panel speakers here: what innovation does blockchain and NFT bring to gaming and to virtual platforms? I would like to begin with Sébastien Borget, who is the closest here. Yes.
Well, I think like the main innovation that blockchain and NFT has been providing to the video game industry is really the notion of true digital ownership of any content. If you look back at the video game industry for almost 25 years, 30 years now, any content that we bought, whether games were premium or freemium, didn't really belong to us, because yes, we could use it in the context of the game, but that's pretty much all we could do with it. We couldn't transfer it to other users, we couldn't use the content or go and sell it on a marketplace like an eBay, etc. That was actually forbidden by most game developers, and even we had to legiferate and regulate it in countries like Japan or Korea. So it's been like mostly renting game items, and we've built a video game industry big of 2.5, 3 billion gamer and worth several hundred of billion of dollars of value, on top of closed economic ecosystem where users couldn't really benefit from the value of the digital asset, which they actually spent real money on to acquire. We also never had the ability to have a source of trust in a sense of like who has created an item, who is the owner of that item, and how many digital copy of that item, and the immutability of that item. So you as a player or as a user spending real money to acquire content and having the insurance that that content is going to remain yours and will not be removed by any centralized actor or the game developer or the platform where you originally acquired it. There's been so many examples of games actually shutting down or developers making decisions that has affected the economy of the game or even taken away what made that item valuable to you in the context of gameplay or beyond. And so we think that that is a lot of value that's been lost, and there can be much better improvement toward it. And only a technology that is transparent, that you can trust, and that no single party control can actually enable the birth of a new digital economy, like in the real world, an open economy that spawn across not just one game or one platform, but essentially across all of them.
Thank you, Sébastien. Henry?
I think that Sébastien pointed the fundamental aspects of the innovation. As you know that I'm a gaming guy. I have been working in the gaming industry for more than 26 years. So I want to add the economic aspects of the innovation. Before blockchain, a successful game must be fun to play and has a very well-designed in-game economy, but the economy is limited within the game. It cannot go outside the game. But with blockchain technology, it can be extended beyond the games. So it can have the real economic value in real life. It's a fundamental change. And in addition, we will talk about later, but interoperability makes the game's items valuable in the real world and in the other games. It's a very fundamental change. So I think that blockchain technology will be the paradigm shift for the video gaming.
I think in addition to everything that David said, which I agree with completely across the board, I think one of the things that blockchain does is it actually allows for the decentralization of the game operation itself ultimately. It allows for creation of decentralization structures that allow things like the operation of servers. You know, if you look at concepts of mining, you break it away from just running a GPU to, you know, running a server that, you know, a game can actually run on. Or in the long term, rather than sunsetting a game, handing it over to the users themselves to allow them to operate their own game, you know, releasing source code and things like that. In a sort of Web 2.0 context, this makes zero sense. Most people would never think of this. Most game companies would never think of it as a potential option. But blockchain is something that makes that possible.
Thank you. Philip?
When, historically, when Second Life came out in 2003, there were two things that we needed it to do to be successful, and I think those are two things that we broadly sort of see in blockchain today. The first was that we wanted to enable people to buy and sell things from each other. And of course, if you let people sign up for a service from around the world, the probability that they're both in the same country and use the same currency is very, very low. So the first thing was we simply needed to make something that enabled small payments to be made for small digital assets between people that typically weren't in the same payment system. So that was thing number one, that blockchain is not there yet, but it's close. You know, it looks closer. The second thing was intellectual property ownership. So in Second Life, if you made a beautiful orange pair of glasses and you wanted to sell them to someone else, you wanted to also make it clear what rights you conveyed to them. You wanted to make it very clear that they owned it, recognize that they now owned these glasses, you know, or they were transferred from one person to the other. And so all of those little checkboxes and metadata, which we kind of today call NFTs, were also a requirement for Second Life's success. We didn't want to claim that the content being built in the world was like owned by the company, and that was one of the ways that we clarified that, was that you had basically the same sort of information that we see on the blockchain in NFTs today. So those were two examples.
Thank you very much. I think I hear two keywords from your thoughts and comments. So one is ownership, and the second one is interoperability. I do also believe that one of the key attributes of Web3 gaming and virtual platform is ownerships. Users are being able to own their virtual items, identity, etc. And I think it's important to go a little bit more in depth about ownership. So I would like to ask, why does ownership matter? What does it bring to users and companies developing such platforms and games? I'd like to begin with Philip this time.
Yeah, I mean, I think ownership, obviously, well, clarity around the ownership and use of one's newly created intellectual property is really at the key here. As I said before, that if you, in an online system, are unclear as to who owns what, the presumptions that people make are not going to be the right ones for the growth that you want to see. So I think clarifying that ownership can be had, that there's a path to it, is one of the things that's gotten people so excited now about Web3, like codifying and clarifying ownership. And that's critical to economic success. You know, most real-world economies have most of the things going on in those economies are created by and ultimately owned by the people who made them, not by the government or a platform provider.
Yeah, adding to that, I mean, I think that in the Web 2 space, the concept of ownership is kind of a lie that has been sold to users. You know, where you go and you buy something and you think that you own it. You know, I've paid money for this thing. In the real world, when you pay money for something, it's yours, right? And that's something that has started out in gaming back when you would buy an actual disc or a cassette that was yours, and you know, with the advent of cloud gaming and things like that completely falling away. You guys were way, way, way ahead of your time in terms of reintroducing that concept, and you know, will continue to be, you know, leading in that space. But that's I think one of the important things about blockchain is that you get that actual ownership and it's clear who owns it because nobody else can take it from you.
Thank you. Henry?
In the traditional gaming sphere or almost existing games, the items are owned by the game developers, are owned by the games, technically, legally, and economically. But blockchain technology opened a new paradigm for the users to own their own items on from the games. It's very important. It changes the spheres for users to play the game because they already play their items in their own games, but now they can extract the items from the games and they trade the game items over the exchange and they bring them into a new game to play the game with the items. It's a very new one for players to play the game. I think that the ownership is a fundamental change for Web3 gaming.
Thank you. Sébastien? At the Sandbox, since we started back in 2012 creating a mobile game that our mission has been always to empower players to become creators. And to fulfill that mission, we wanted, and we actually faced the challenge that even though people were creators, they couldn't really benefit from the value they generated from their creation. They couldn't receive a fair revenue share for the time they invested into content creation, or the time they invested into playing games, leveling up, earning items, and being rewarded for that. So we faced a challenge that actually impacted our retention. Over the long time, our creators were leaving the platform for other platforms where they could receive a revenue share, and we were limited by the App Store, the Google Play Store, our capability to share a revenue, portion of that revenue. When we found about blockchain and NFTs around 2017, we immediately saw that combining user-generated content and NFT would be the solution to that problem, allowing anyone to become a creator and own the content they create as an NFT would solve that and allow them to monetize the content the way they want. But ownership without utility, I think, isn't really meaningful and isn't really to drive value of those items. So we need also to add like a context where the items you own will be valuable. And that's why we thought like combining it with a game maker on the Sandbox platform will ensure that every item, every content you create will have a real utility inside the virtual world that we started to build. And thinking about it today, I think it's amazing to see that Sandbox is essentially a decentralized virtual world that is built and owned by the users. They own all the assets. They progressively own all the lands that constitute that virtual world. Today, 70% of the lands are actually owned by the users, and within a few years, it will be 100%. And going even further, the users also own the currency, the token, that contributes to the economy of that platform. So ownership is like the ground layer for establishing an open digital economy. And that economy will trigger services, will trigger millions of jobs to be created, and a whole ecosystem on top of it that is also decentralized, which we're not controlling as a company, and will lead individuals and businesses to be successful as they build and provide other services on top of Sandbox.
Thank you. I think it's really interesting how virtual items can now have values, yeah, and it's becoming an asset, I believe. Yeah, so now I think we should go into the next question about interoperability. I would like to go a little bit more in depth on that topic also. One of the most frequently asked questions in Korea about blockchain games is how realistic it is to bring interoperability. The logic behind the question is they say different aesthetics in various platforms, genres, and also due to the challenges of maintaining the game balances. Interoperability seems like a distant future, as we haven't seen any strong, convincing example yet, even though it has been touched upon numerous times in the blockchain industry, in the Web3 gaming industry. So, what are you preparing, and what efforts are you putting to build an ecosystem where interoperability can really work and really can show the world that this is a new paradigm? I would like to start with Jason this time.
Sure. This is I get in trouble at Web3 events for this specific topic a lot because I'm always like the sad glass of cold water on top. I think that when you look at interoperability, you have to look at it in two different ways. There's interoperability of UGC and there's interoperability of licensed content. People have taken a look at things like Ready Player One, okay? Which in a book, you can write whatever you want and nobody's going to sue you for saying that you're flying around in the Millennium Falcon or the Back to the Future car or anything like that. It's totally fine. You can have Chewbacca as a friend, you can braid his hair, it's totally cool in a book. The problem is that when you start having this concept between games or between metaverses or however you want to look at it, there's all sorts of property rights that get wrapped up in it. And if you have an NFT from one game, okay, and you want to use that NFT in another game, now this is a different company, different developers, all of that. These developers over here have to make the decision, hey, it is in our best interest to take this NFT from over here and put it in our game, give it utility, code the art, rig it up, do all of the work that game development involves that most people in the blockchain and Web3 space are completely 100% ignorant of. They think that you just take an NFT and stick it in and you're good to go, it works automatically. But that's not really what happens. So I think that the future of interoperability, if for IP-based content, is going to be dependent on a changing in the way we think about intellectual property in general. I think that that's going to require an industry-wide look at what intellectual property means, what fair use means, and for companies to recognize that it is in the company's best interest, the intellectual property holder's best interest, to permit the use of these things across different platforms. That itself may be a little bit of a long way off, but in terms of user-generated content where people are creating their own things, whether they're creating it in the Sandbox or in Second Life, finding ways to bring those two worlds together, I think is something that's much more possible.
Philip?
I think if you look broadly at computer games kind of over all time, those game developers are absolutely resistant. They have zero desire to have interoperability. It even makes sense because a game is often a cohesive, beautiful, singular environment, and it doesn't make any sense to drive a car from Grand Theft Auto into Among Us. It doesn't make, nobody wants that. But I do think therefore, for interoperability to become profound and a significant element of the ecosystem, we have to have a user experience that will drive that. I would assert that that user experience is socialization amongst people with avatars. If I create an avatar for myself that is richly described, I have these cool glasses, I have a jacket, I've paid for this stuff, my friends know me immediately when they see me with my orange glasses, that is a driving force that will make platform and game providers enable interoperability, but I think we have to get to that, and we're not quite there yet. That is to say, we're not at the point yet where most people are comfortable identifying themselves kind of through an avatar. But I think as we get there, everybody will have to kind of finish the transition to enabling interoperability.
Thank you, Philip. Sébastien?
So, like Philip said and Jason before, we're still very early on in interoperability, and even though it sounds very exciting and promising, it comes with a lot of challenges. We are seeing some progress overall in the industry. There's been recently the announcement of the Metaverse Standard Forum, which is trying to solve those topics of interoperability, but they are taking it from a very centralized perspective and from a a very low-level perspective of just like file format interoperability, just how we're even going to interpret file format and representation of content between centralized application predominantly, even though they started to open toward Web3 application. Recently, we launched the Open Metaverse Alliance. I announced that in a conference last July with leading actor of Web3. And we're already taking more into consideration some aspect of interoperability around the notion as well of identity, avatar reputation, how you not just bring the models, the content, but you also think about like all the achievement that you've acquired as you play one game. You want to arrive into another game with people recognizing those achievements and content. It's very relevant. At the sandbox level, I think we're also trying to contribute as much as possible to this concept of interoperability as early as possible. And we've done two things. One is the content creation tool at Sandbox. They are not limited only to Sandbox. VoxEdit, our 3D editor, can output like voxel format and GLTF animation. And we're seeing the content and asset that's been made by those creators already being used across a wide range of other applications, including mobile AR app like OVR, Jadoo, Genie, FlickPlay, and every day I discover new ones. And also the second element is like we've been working hard to enable external NFTs to be displayed, interacted, played with, and come to life in Sandbox. So if any art images can be displayed already in Sandbox, that's great. That's been seen in decentralized learning, Voxel, and a few other decentralized world also. But with the no-code game maker tool in Sandbox, you start adding a lot more richness and context around it. And the most powerful use of interoperability that we've showcased in recently, 3 weeks ago, with the season 3 of Sandbox, has been the ability for people to play with 13 most popular NFT collection that we transform from 2D static images into 3D playable characters. And that's, I think, one of the leading points of the Open Metaverse. Like, we're a platform, we provide creation tools, virtual worlds, so spaces where people can come. We do not necessarily need to create the characters ourselves. The characters will actually come from all around the ecosystem. Bored Ape, Clonex, Cool Cats, Cyberkongs are one of those 13 collections. And the results, the engagement from people who came with their NFT and played with for the first time, where they were just 2D collectible images before, has been amazing. Like, we're seeing like double retention metrics. People use it to connect with other members of the community and see each other in the context of playing, progressing, and earning. And that transpires in Sandbox, but also over social media, as they are like proudly sharing key moments of them interacting with their avatar, which become their new representation. The beauty of it is those avatars, they are totally non-human for most of cases. They are creatures, animals. The community in Web3 is so creative, so imaginative, that it's like, I think for me, it's the best representation of what interoperability means.
Thank you. Henry.
I think that the games and blockchain are at the heart of the metaverse. The reason why I think that the interoperability of blockchain is the core of the metaverse. I strongly believe that every game will have its own tokens and NFTs in the near future, in 3 years. So the coins, the tokens and NFTs from each game can be traded each other and can be used each other in every game. So I believe that the economic system, the inner game economic system, can be the core of the metaverse. Everyone wants to play their own game. They don't want to play the metaverse. They don't want the metaverse. They want to play. They like games. So, but their gameplay is connected to the other gamers' plays over the blockchain. Blockchain interoperability. The huge ecosystem. Every game players can trade their items, and every game players players can connect it to each other, I call it is the Metaverse. So I believe the interoperability of blockchain is at the heart of the Metaverse.
Thank you. I think we are actually doing well, very on time. So I'd like to give some individual questions to our panels. And since we're talking about ownership and interoperability, I think it would be a good segue to talk about play to earn. So I would like to begin with Jason this time again. So my question for you is play to earn a game changer? And what impact would it bring to developing countries? And what opportunities can it have in developed countries like Korea?
Okay, so, man, I'm just pouring cold water on top of everything today. So at Gala, we've taken a very different approach to this concept of play to earn. The problem with the concept of play to earn is that it implies that the reason that you play is to earn. Now, last time I checked, that makes whatever it is that you're doing a job, not playing. So what we do is we focus more on the concept of playing and earning, okay? The main point of the game is to have fun. In any game context, you input things and you're supposed to get out fun, right? You input time, you input energy, maybe you input money, and out the other side of that box comes fun. Now, the concept of play and earn, the only thing that changes there is that on the other side of that equation, you also have a potential output that is of some economic value, okay? But again, it only is a potential output. Okay, because it has to be based in an ecosystem that actually works and actually functions. So for us, we start at the very, very beginning by building a game that is fun. Okay, all of the games that we currently have in development right now are based on the idea that this is going to be an amazingly fun game, and that is the absolute foundation of everything. Now, if there's an earning component, that's fantastic. Okay, but that earning component should not be something that in a developed country is a primary driver for your engagement in the game. Now, it can be a bonus, it can buy you a coffee, you know, it can do a few things like that, but you shouldn't look at it from the perspective of, you know, this is going to become a money hose. Okay? Now, in the developing world, this is where things get very interesting, because there are places in the world where a couple dollars a day can be the difference between you starving to death and being able to feed your children. And in the developing world, that can be very, very powerful. And so for us, we look at this from the perspective of how do we create an economic system that is perpetuated by an absolutely wonderful playing experience that is a ton of fun, but that provides a little bit of value for some people within that ecosystem. It can provide more too, but it's dependent on the actual stability of an ecosystem as a whole. So that's kind of the direction that we go with that.
Thank you.
I want to add
Yes.
something.
Yes.
Yeah. Actually, we are running the most successful and most sustainable blockchain game in the world, called Metaverse Global. Metaverse Global is very popular in Brazil or Philippines, but it's very popular in the UK, Sweden, and Belgium. So I don't see that the critical difference between the developed country and the developing country, because blockchain and Web3 technology can make games more enjoyable. It's the core. To earn or unearn, it's a subsidiary. I believe so.
Okay, thank you. Yeah.
I think a critical distinction that drives whether we call something play to earn or not is whether or not there's an increasing amount of value created within the system or not. So for example, if you have a game where everybody puts in $20, the game developer gets $2, and the other $18 is essentially randomly given out to all the people in the game, that is called gambling. And eventually you run out of money because you're essentially taking fees from the system, and yet there's no value being added. In a UGC-based system like Second Life or the Sandbox, for example, where people are creating things that are actually of value to other people, then you have a growing amount of value that's being created. And in my opinion, that creates the opportunity for some of the people in that environment, if they care to choose to earn money from it. So it's an important distinction as to whether there's net total value creation that is positive or not, or potentially negative.
I couldn't
yes,
agree
sure.
more, actually. Like, for me, play and earn, it's just we look at play and earn from the angle of like how we are creating opportunity through diverse skills. So not only like repeating action and the same action over and over, for people to be empowered through this medium, through our game. And the creator economy more particularly, that Second Life has initiated, you mentioned over 20 years, 23 years ago already, at massive scales. You've been one of the pioneers that made the world realize that people could actually make a living and have a job in virtual world. And I think like Sandbox is also reflective of that, and we're seeing people who've had like a real positive impact, like they discovered they had valuable skills into those virtual world environments that were maybe not that valuable in the real world. And to me, that's one of the benefits here of blockchain and play and earn in general, like making a positive impact that grows value back into the real world based on, like you said, like not zero-sum game, but creative net positive value into both the real world economy and the virtual world economy.
Yeah, I think the foundation of all of that, though, is the creation of an actual experience that is fun and engaging. If you don't have that, you don't have anything. Yeah, we can't have a 3v3 fish battler here, guys.
Creating should be fun, playing should be fun, exploring should be fun.
Exactly.
All of that.
Exactly.
I think I just, should let them just have conversation. This is more interesting. I mean, since we're talking about economy here and also kind of cryptocurrency being the integral part of it, of Web3, I would like to ask a question to Philip. I think this question is a bit of a devil's advocate, I think, because in the industry, you always hear just only something optimistic or positive about the future of and the current status of cryptocurrency. But what I was impressed was in one of your interviews earlier this year, in regards to your concern about crypto and wealth inequality. To quote, crypto is going the wrong way on that, making a smaller number of people even richer than ever before. Some would argue that crypto, does give the public an early, access compared to traditional assets where it is harder to get in early stage. So what direction do you think the crypto industry should take? And what's the core of the issue that you see in the forming wealth inequality in the crypto space?
Right. Well, first of all, the perspective that I have on this is unusual and somewhat different because Second Life had what was kind of a cryptocurrency. That is, it was a tokenized internal economy that freely traded against external currencies like the euro and the dollar, all the way back as far as, I think, 2004. And so we've had a lot of time to look at this. We set up the economic system inside Second Life differently to some extent because this all happened before cryptocurrency, so we didn't even have that as a reference. And then cryptocurrency came around, and cryptocurrency is a digital currency with a different set of rules. And the point I'm making about wealth inequality, which is a point that many others have made, it just kind of adds to the overall conversation, is not a inevitable quality of all, say, blockchain-based systems, but it is an important quality to note regarding cryptocurrency today. And let me just give you the simple example. If everybody in this room, if I went around and I gave $1,000 bills to each one of us in the room here, and then we closed the doors, and for a month, we had to survive buying and selling things from each other however we wanted to. So people could buy advice from therapists, and they could buy technology from software engineers, and somebody else might have a bunch of food in their bag, and they could sell food. The question that's interesting is, after a month of this, of all of us actually similar people trying to help each other out and trading with each other, what happens to wealth inequality? And the interesting answer, which has been published by, for example, Scientific American in 2019, it's an important finding, is that actually wealth inequality becomes very bad. You end up with one person in the room, kind of like in a poker game, ending up with all the money. So basically the problem is frictionless economies in which people can trade extremely easily with each other with no fees, et cetera, like what you hear about in cryptocurrency, in many cases actually concentrate wealth in the hands of only a few people, even if those people didn't mean any harm. And so it's just an important finding. The fortunate fact is it's fixable by the way you design the cryptocurrencies, but the reason I'm often quoted about it is it's important to note that the current cryptocurrencies don't work this way, and in fact, they are dramatically concentrating wealth in a small set of early adopters, basically. Not the least one reason of which is because the token increases in value, and so the earliest people are the richest. So I'm only concerned that we can and we must design digital currencies that preserve wealth equality, and that's the simple goal.
Thank you.
Maybe something I would like to add. I don't disagree with what you said, but I think like if you look still in the context of the video game industry with what was before, the fact that like all the value creation from the player time, whether they are like building content in UGC or they are spending real currency to those games, was actually concentrated into 2, maybe 3 actors: the developer itself, the platform that take the cut, and the publisher that got into it. Eventually, the advertising platform where they spend for user acquisition. So I think the fact that like the value goes now into the hand of players and communities that organize themselves as they own the asset, and the way they own the asset, that's maybe the debate. Should they own the asset right from the beginning into like a first crowd sale of NFTs, or through a token initial generation event, or through other mechanisms that ensure more fair distribution over time based on player engagement? I think that would be actually the best answer to that. I think it's just already so much better than what we've seen in the past, and it's one of the reasons that people feel so engaged now into like blockchain gaming, because it has had real benefit effect for millions of people already in the world.
I partly agree with you and partly agree with you. Actually, we are at the very early stages, so we have a long way to go in tokenomics in games. But one thing I learned from the 16 games live on our platform is that tokens and NFTs should be for users, not for developers. Some developers can earn from their selling their tokens or NFTs directly to users, such as in-app purchase. But it's not working. It's just an in-app purchase. It's not economic flow. So we know that tokens and NFTs, tokenomics should be for users to play and earn, but game developers can earn from the vast traffic or vast traffic of users. They play, the more players use, and the more money games can get. So I believe that tokenomics should be for users.
I think leaning in a little bit on what you were saying, which I agree with, by the way, completely. I think that what we're dealing with here isn't so much a problem, as you said, with cryptocurrencies. It's a problem with humans. And part of what technology enables us to do is to find ways to use technology to solve fundamentally human problems, to evolve in ways that we, as basically the monkeys that we are incapable of doing sort of by ourselves. And so this is one of the things that, I mean, this is why I got into the blockchain space to start with, right? You know, for me, it came from the context of, you know, foreign aid and seeing tens of millions of dollars go to people in Haiti, or go to Haiti rather, and then not go to people in Haiti. and seeing people die of starvation while, you know, some people in the country carried away literal piles of money. This is a problem, and this is a human problem that we have to solve. And eventually, I believe that we can construct blockchains that do solve some of these issues, and we can tie them into game economies, and we can, you know, tie them into creators and things like that, and provide ways for people to engage and to earn that are not necessarily sort of blocked by the same structures and you know, I hate to use the term, like sort of the patriarchal power structures that are currently in place sort of across the board. You know, with Big Brother looking over everybody and sort of guiding everything within a given economy. I think that, you know, we can fix these issues.
I mean, still, you mentioned about the human problems. I think this will be a great jump to the next question to Sébastien. I mean, because, you know, being a human is not just about earning. You know, friendship matters, you know, collaboration matters. There are, you know, values that we should keep sustaining. And you very often mention in your tweets inclusiveness and diversity as key values informing the Sandbox Metaverse. So what do these liberal values mean for virtual spaces, and especially for the Sandbox? And what is your ultimate vision for the Sandbox in this regard?
I very often see the Sandbox as a new digital nation without frontiers. And I see the Metaverse in general as an opportunity to start from scratch and repair or not repeat the inequality that we're having in the real world and that we inherited of thousands and thousands of years of human history. So having a chance to build a virtual world or a myriad of virtual worlds where that will be more equal, where we'll have more gender diversity, where we'll have even the ability to choose your identity and decide if you want to be male, female, non-gendered, or even non-human, and have people appreciate that representation of yourself because you chose it, not just because you're born into a certain country, you've received a certain education status, or were lucky enough to have access or not to education, for example. That's really important. The second thing that I think is important is like to make sure that the tool that we provide for people to create content and participate into this economy of the metaverse are accessible enough so literally anyone without any previous skills can start becoming a creator. And we've done that with our no-code game maker, and we're proud to have a very diverse already audience of creators that come not just from developed countries like US or Korea, but also from new territories, Thailand, Indonesia, Philippines, Brazil, Argentina, as well. And that in this virtual world, when users know where we are from, and I'm glad that we have concrete examples already of like driving this change and embracing that. It's also very important to make sure that it is inclusive as well for any generation. So we bridge the generation gap and we don't build a metaverse that's only like for the Gen Z or for the teenager, and that will leave a larger part of the population apart from that innovation. I think because we're in the tech industry, we often forget about like generation that are above 40, 50, and 60. And yet we've seen, after 10 years of smartphone, casual games, and even instant messaging, that they were able to adapt to that technology and use it to connect, like grandparents connecting with their grandchildren, to interact and be creative together. So that's also an important topic. And we're proud that the way we were building the Sandbox, on one side through user-generated content, on the other side with brands, we're working hard to make sure that the culture that is present into that metaverse is inclusive as well of all the culture of the world. So that's why we spend so much time and effort into of course, bringing a lot of brands from entertainment, gaming, fashion, lifestyle, music artists, celebrities, but also creating the K-verse, which will bring a lot of like what makes Korean culture so special. So Sandbox is both global, but also appeals to local populations. And following the success of K-verse, we have Turkey-verse, Dubai-verse, Singapore-verse, French culture, British-verse, Brazil-verse, and many other regions of the world, which are proud to come in, build a neighborhood, and show like how their culture can be expressed, interacted with, and used to create new opportunities and build a new world.
Thank you, Sébastien.
Yeah.
Due to the time,
Yeah.
I would like to ask Henry, give him the last spotlight.
Yeah.
Sorry about that.
No problem.
So we made, since Sébastien was talking more on the global spectrum, I'd like to go more local this time. WeMade has been one of the key pioneers in the blockchain gaming space in Korea. How has WeMade been disrupting the gaming market in Korea, and how do you see Web3 gaming developing in Korea, and what are the challenges that you see?
Yeah, back 2017 or January 2018, that there was a first price spike of cryptocurrencies. Everybody talked about cryptocurrencies, but February 2018, the prices dropped down and everybody forget about that. But I think that every gaming company considers that the cryptocurrency is very suitable for games. But when they saw the price drop, it's a scam. They gave up. But we didn't give up for last 4.5 years. It makes us at the position of current. But we are servicing 16 games live globally, excluding China and Korea. Korea has a very clear law that banning players from making money from games. The law was established about 20 years ago, some gambling event, but I think that it should be changed and it can be changed. But Korean gaming companies have a great ability to develop good games. As you told that good games, fun games is the start and ultimate for the blockchain games. So I believe that Korean gaming industry have great potential for delivering good blockchain games all over the world. As of 16 games, 10 developed by Korean companies and 6 developed by foreign companies. By the end of this year, we'll have 100 games, more than half developed by Korean developers. So I believe that blockchain is the very great opportunity for Korean game developers as well. So if the market is open for the blockchain games, it will enhance our potential and ability.
Thank you. I would like to wrap up the session with the last question for each one of you. I think since you are all pioneers in this space, successful pioneers in this space, I think many would want to ask you this question. So what advice would you give any companies or startups that want to get into Web3 from Web2? I would like to begin with Jason. I think you look ready.
I'll do it. I'm ready. I got this.
Yeah.
This is something, and I spoke about this at a conference recently. I don't remember which conference it was. But when a Web2 company wants to get into the Web3 space, the first thing that they often do is they try to act like a Web2 company. And they have this very cold exterior, and they don't engage with people in the way that they should. A Web3 company, okay, one of the hallmarks of being a Web3 company is that the people in the community control things to a very large extent. And so the number one piece of advice that I would give companies looking to get into the Web3 space is to get down off of your high horse, come out of the tower and go experience life among the people, talk to people, get a Discord going, stay in that Discord, talk to people, let them be angry. If they, let people vent their frustrations, but engage with people in a open, genuine fashion, because that's what really makes a difference. That's why travel all over the world, hanging out with our community members, like sitting down in some random bar in London with 25 people who love Gala, because that's how you connect with people. And I think that that's important for the actual growth in the space.
Thank you, Jason. And wear orange color.
Yeah, orange is good.
Philip?
Well, I'd go back to what I said earlier, which is that if you're a company seeking to take advantage of these architectures that are broadly called Web3, the thing that you need to do is establish some means by which those people using your product or your game or whatever are able to create things of value. This was true for the Web 2 companies as well, by the way. The Instagram, for example, enabled people to take pictures and share them easily, and that was a value creation. So this idea of searching for positive value creation, I think, is one thing that you can't, it doesn't matter what the underlying platform is, if you don't have a way for people to add value in some way by coming there, none of the underlying mechanisms, be they Web 3 or 2 or 1 or whatever, mean anything. The other thing I would say is to remind us that human beings are inherently collaborative and seek fairness. This is wonderful. This is what we do in everything. We do it in small communities, big ones. We do it in politics. We do it everywhere. The Web 2, I think part of the kind of justification for Web 3 that's kind of sad is really a relatively brief period in the middle that we call Web 2, which, at least if you're not talking about games, is dominated by just two companies. We can say their names here. Web 2 is Facebook and Google. Those are the two companies that predominantly have extracted these taxes from participants on their platforms. They're really the only two. It's, in my opinion, having seen Web 1 all the way back to the very beginning of the consumer internet, I find it surprising and sad that we have this situation. But it is not in our nature to build extractive platforms. It's in fact in our nature to build things that are more like Web 3. Our nature is to build person-to-person systems and seek fairness and enable the people that are around us. And so I guess that's kind of my optimistic endpoint, is that this isn't us having to sort of blow up the terrible machine. It's just kind of been an odd and unfortunate 10 years that we've got to move beyond.
Thank you. Henry?
Whenever I meet the people who find a job or who find a business opportunity, I tell them, join the blockchain scene. And they responded to me that you and other guys are already doing a great job. Is there an opportunity? I respond to them that if we have 100% to make, we may be just doing 1%, and I guess that the other guys are just doing 2%. So we have a long way to go. So you can start and learn many other things to make your own chances. So I recommend that join the blockchain scene. Blockchain is the very general technology, so it can change the games as well as the other industries, entertainment, sports, all other industries. So I believe that start to working the blockchain scene. It's very sustainable and successful for their lifetime.
Thank you. Sébastien?
I fully agree here again with Phil and Jason. We're so early on in Web3. It's a nascent space. And so what's amazing is like we're witnessing probably one of the largest period of innovation and experimentation again around business model. Meaning like people are creative, people are taking risk. Maybe they will fail, but at least they are trying to build something new and something that's really touching down on the principle of community first. So not only meet the community and meet the people who like you, but meet the people who hate you and try to find why they hate you to work through those aspects. And my recommendation will essentially be around the idea of like creativity first, like come in the space with a very creative mind. Don't try to replicate what you already have in the real world as a business or like a brick or mortar business as well. The second is like think about not only value creation, but that creation of value to go to the user first, and not a tiny percent, 100% of it. Like you want to reward user, you want to give value to user. You do not want to try to extract value. So don't come into Web3 with monetization in mind. If you start entering Web3 on how we're going to make revenue out of this, you're already wrong from the beginning. How are we going to reward the people who spend time with us, who create with us, who engage with us? What can I give them that is valuable so they want to engage into my community, my Discord, spend time and follow my project and build on it and be part of that construction, own it, and together build it and grow it. Embrace user-generated content, maybe more specifically for Sandbox, but you cannot imagine the number of brands and projects in the world that are still so protective. This is my own brand. I don't want people to touch it or to modify it. Co-creation is probably the most beautiful thing we're seeing in Web3. Enabling users to build, to expand your brand presence. It's valuable for you as a brand, it's valuable for them as fans, and there's a way that we can do that in a very rewarding manner that benefits both of us. And yeah, I think those are essentially my main recommendation to anyone who's looking to join into Web3.
Yes, that was the last question, and yeah, thank you for your time and insight. I hope our participants and people who are watching this at home, at the office, learned a lot about Web3 gaming, and I hope that many will now join the vision of Web3 gaming and virtual space, and hope it will also continue to grow in Korea also. Thank you very much. I heard that, Philip, it's your second time in this event.
That's amazing.
So, what's your impression? And
it's fantastic. I can't believe I was here in 2007, basically talking about very similar things. And so it's been a while.
Yeah, so this topic is very relevant, and maybe after 10 years, 20 years, you know, we'll talk about the same topic as the industry will be bigger.
Right.
Yes, thank you very much. Thank you very much. Thank you for your time.
Thank you.
Thank you once again to the moderator and speakers. Next 2030 Busan Navigating Toward a Better Future session will begin at 11:30 a.m. Please return to the Seoul by 11:25. Thank you. 2층에 자리하신 참석자
For those of you who are sitting on the second floor, please join us on the ground floor. Thank you very much.
We'll now begin session 2030 Busan, Navigating Toward a Better Future. Busan is taking on the challenge of hosting the World Expo 2030. The Busan World Expo, which is being prepared under the theme of Transforming Our World, Navigating Toward a Better Future, will be the key to a better world. In this session, we'll take the time to learn about the meaning and background of the Busan World Expo, which will be a festival of people around the world. First, Dr. Jang Dae-hwan, Executive Chairman of the World Knowledge Forum and Chairman of Megyoung Media Group, will give us the opening remarks. So, ladies and gentlemen, please welcome him with a big round of applause.
Distinguished guests, ladies and gentlemen, Busan is about 1 hour flight away from Seoul City, but it's a very nice second city, population more than 3.5 million, and alongside with the Busan, maybe 10 million people live around there. The decision day of who will be the host for the World Expo 2030 is only 6 months away. We organized the Busan Expo session at this year's World Knowledge Forum to support the increasingly fierce competition. I hope this event will be an opportunity to inform global leaders of Busan's strength as a candidate site for the World Expo. One of my speakers, Min-Jin Lee, she is author of the world's bestseller, Pachinko, is also here as a speaker of the World Knowledge Forum. As many of you have already read, Min-Jin Lee's novel, Pachinko, begins with the background of Yeongdo Island in Busan in 1910. It is the story of people who meet their unfortunate fate with the opening of the Busan port. As you all know, the modern era of Korea began with the opening of the port. The first port opening was not our arbitrary decision, but was done by compulsion from outside, leading Korea to be colonized. However, the second port opening was successful. South Korea stood tall as an advanced industrial country. With exports being the driving force, and Busan port played the most important role in Korean economic development. In that sense, it is not an exaggeration to say that the modern era of Korea began at Busan port and was also completed at Busan port. Now we have to prepare for a third port opening to face a new maritime era. I'm sure the milestone will be the World Expo 2030 Busan. Excuse me. The ocean is another universe left for the humanity, as there is still space to explore. In order to feed the rapidly increasing world population, we shall actively utilize fishery resources, and the problem of resources will also be solved through undersea development. Global trade will continue to take place through the sea, and the development of information and communication through submarine cables will be a key infrastructure for future economic development. The ocean can also be a sustainable living space for mankind, and just like the maritime city Busan is promoting with the United Nations. We will be able to show all these blueprints to the world through the Busan Expo. Korea had many experiences hosting global international events. 1988, we had Summer Olympics, and 2018, we had Winter Olympic Games, and 2002, there was FIFA World Cup Korea, Japan, and we have a World Expo 2012 Yeosu, but it's not authorized event, I believe. Based on our past experiences, the people's united desire for attraction was our greatest competitiveness. We expect to make some miracle once again. Along with the Mail Business newspaper, I'd like to thank the Busan Mayor, Park Hyung-jun, and Secretary General for the bid company for World Expo 2030 Busan, former Minister Yoon Sang-jik, for preparing the Busan Expo session at the World Knowledge Forum. I hope to promote your encouragement. Thank you.
Thank you for your words. Next, Park Hyung-jun, Mayor of Busan Metropolitan City, who will deliver a presentation. So please welcome him with a big round of applause.
Greetings and good morning to all distinguished guests. I'm truly honored to be here today to introduce 2030 World Expo Busan, Korea. Although I could speak for hours on our grand expo plan, I'll do my best to fit everything into 20 minutes. So please stop me if I go too long. Today, I hope to be able to give you the sense that Busan is fully equipped and capable of providing the international community a new vision and approaches as we enter the great transformation. Together, we as humanity are ushering in the era of a great transformation of civilization. This great transformation ultimately requires technological innovation and rethinking universal values. Humanity is longing for a freer and more equal world. At the same time, new digital technologies are having a massive impact on us. Now, the mobile smartphone is my wife. The Google is my small god. As such, the impact is so big that it is changing the social order and the mode of life we live within it. How we respond to this great digital and ecological transformation will determine the destiny of humanity. As a statesman, it is my duty to ensure my children and grandchildren inherit a world that embraces solutions to previous generations' mistakes. We must not be all doom and gloom when faced with such a daunting task. Opportunities always arise from a crisis, whether it be climate change, pandemics, various aspects of inhumanity, technological gaps, or deepening disparities among countries, regions, and individuals. They all challenge us to act, and I want to see light at the end of the tunnel. During past 3 or 4 decades, globalization has offered the hope of mutual prosperity. However, now it is receding, while nationalism and hegemonic power attempt to overtake its position. The world economy is being hit hard from an energy and food crisis, supply chain disruptions, global inflation, to a prolonged recession, and the list goes on and on. Many are concerned that technological advancement will fail to become a beacon of hope, but instead deepen polarization among countries as technology becomes a tool for nationalistic ambitions. As deal with these international challenges, many conflicts are also arising within individual societies, including racism, gender inequality, wealth disparities, as well as generational and regional gaps. Although the pessimists may want to close themselves off from the world, optimists like myself stand ready to see the world through sure trying times, as we are standing at a very crucial point in history. The international community requires the great transformation in order to tackle the series of challenges before us and head towards a better future. To achieve supercompensation, we need to set out our future direction to focus on with the aim of reaching a universal consensus. As such, the World Expo can serve as a platform that will offer a path forward to bring us closer to a truly global civilization. This is why the city Busan and Korea have set out the main theme of the 2030 World Expo as transforming our world, navigating toward a better future. Under the main themes, we have three additional sub-themes. The first is the sustainable living with nature, illustrating our responses to climate change. The second one is technology for humanity, embodying response against the unevenness of digital innovation around the world. And the last one is platform for caring and sharing to tackle gaps and inequality among countries and individuals. The year 2030 marks the 15th anniversary of the Paris Agreement adopted in 2015, the very first globally binding climate consensus. As a result, countries around the world are committing themselves to reducing carbon emission to meet set targets. The year 2030 will become a platform to review and share their commitment in a bid to achieve 2050 target goals. As well, various innovations will be shared and discussions will take place to lay the foundation for a better future for all of us. With such lofty goals, there is no better place than Korea to have such discussions on the great transformation. If I could describe Korea in one word, it would be transformation. Over the past century, the country has gone through colonization, liberalization, war, division of a nation, industrialization, and democratization. Under such a rapid set of changes, Korea has been able to attain its current unique and unprecedented global profile in a global order. Back in 1953, Korea's GDP per capita was only $67 US. It was one of the most impoverished countries of the world. Yet, quite miraculously, the country managed to transform itself into the world's 10th economic powerhouse, where today the country's PPP, purchasing power parity, is ranked at a bona fide advanced level, beyond $40,000. Once Korea was a receiver of ODA, but now it is a back of various ODA projects. Once following a manufacturing central development model, now a digital technology innovation powerhouse. I believe such an experience has had a profound impact on the way Koreans view the world and instill a can-do attitude about the future. Speaking of such an attitude, it is no wonder that Korea continues to be a source of great innovation with the K-culture sweeping globe. Leading by example, Korea is also spearheading attempts to respond to climate change. The country has set out a robust NDC, nationally determined contribution target, of reducing carbon emissions by 40% from 2018 levels by 2030. And the new administration, which took office this past May, has expressed a strong commitment to achieve a green economy by designating a national task. COVID-19 has shown the world Korea's strengths. We have proved the effectiveness of a strong safety net so that no one is left behind. Our medical system worked well. We have swiftly implemented a quarantine system and recorded a high vaccination rates. As such, everyone in this country has benefit equally. During such difficult times, Korean culture has also been able to give comfort to the world. From the film Parasite, the Netflix series Squid Game, to BTS, so-called K-culture has created a cultural community that spans across borders. The role of K-culture and K-content in pursuing inclusiveness will further expand to tackle inequality, imbalances, and gaps in various areas. You may wonder why Busan is an ideal city to host the 2030 World Expo. Well, allow me to tell you why. I don't want to sound too boastful, but the city has got a special story indeed. The very beginning of this city goes back to a small fishing village. The city of Busan first opened to the sea and the world beyond back in 1407. In 1876, Korea's very first trade port was launched to mark its modernization. Later, it went through liberation and the Korean War and became the backbone of Korea's exports in the 1970s as the first trade port of Korea, handling 70% of all exports. During the Korean War, 300,000 citizens embraced over 1 million refugees fleeing across the country. The economic transformation that took place in Busan was first spurred by light industries, such as timber, textiles, and food products, and later heavy industries like automobiles, shipbuilding, and machinery. Busan is also home to global companies like LG and CJ. Today, Busan is a hub of global logistics, possessing the world's second transshipment port and seventh busiest container port. Busan continues to develop itself by building upon its innovative energy and experiences. The city is being transformed into a hub for cutting-edge machine logistics and finance. It is robustly fostering state-of-the-art digital industries such as blockchain, quantum computing, and the Metaverse. Busan is also drawing up plans for our future as a green smart city. with the aim of fostering an ecosystem for the hydrogen industry. Some may say Busan has too much on its plate, but I say Koreans have a big appetite. We are still hungry. As an innovative city, the city of Busan is carrying out a groundbreaking project with UN Habitat. Together with UN Habitat, we are planning to construct the world's first floating city prototype for climate refugees in the water surrounding the North Pole. This will become a new option to respond to climate change and offer a new vision for sustainable living with nature. Regarding the Expo, the proposed venue for the Expo is undergoing urban regeneration efforts, as it was the previous site where the representative Busan Port was once located. The Expo venue next to beautiful sea can be reached from the airport within just 15 minutes by new advanced and pro-environmental transportation tool, so-called urban loop. While moderate weather and the high-end opera house and global cultural content will greet for 40 million visitors. In a bid to unleash the country's full potential and attain balanced development, hosting the 2030 World Expo will play a really important role on the domestic front too. Once Busan's potential as a global hub city is unlocked, Korea will have another axis of growth apart from the centralized area of Seoul. Currently, talent, business, resources all gravitate to the capital region. This unipolarity is becoming increasingly severe. As you know well, countries that have various hubs have successfully achieved innovation and growth. But those that have just unipolar have faced stagnant growth. The World Expo will become an impetus for Busan to stand tall as a global hub city and make the southern part of Korea as a whole a new growth axis. This is why Korea is working hard together as one team to host the 2030 World Expo, Busan, Korea. Since the start of the new administration back in May, 2030 World Expo, Busan, Korea has been designated as a national task. To this end, the country's diplomatic capabilities are being mobilized to achieve the national goal. Global business, including Samsung, SK, and Hyundai, LG, are at the forefront of Busan's Expo campaign. Koreans from all walks of life are also supporting the campaign and carrying out various activities. Worldwide celebrities like BTS and actor Lee Jung-jae of Squid Game are already honorable ambassador of our Expo. And they are also actively promoting the Expo. We need solidarity and cooperation more than ever in a bid to tackle climate change, global pandemics, and gaps among countries and individuals. Solidarity and cooperation begin from understanding and compassion. Korea can bridge the divide between countries and people with its history and experiences of being one of the world's poorest countries to becoming the 10th economic powerhouse in the world. Busan stands ready to become a platform for a better future. I sincerely hope that the world will discuss and write the beginning of a better future in Busan. With our ambitions for a better future clear, Busan will prove how it can contribute to the prosperity of all from the southern tip of the Korean Peninsula. I'm looking forward to seeing you all again in 2030 Busan. Thank you so much.
Thank you very much, Mayor Park. Next, actor Lee Jung-jae, the Busan World Expo's ambassador. He really wanted to be here to deliver a message, but he couldn't for the reason of health. This concludes the session, as it is the wish of all of us. We look forward to the successful hosting of the Busan World Expo 2030. Have a great time, enjoy your meal. The next session will begin at 1 p.m. Thank you very much.